All right, hey everyone. Mark here, Mark B Markets. Thanks for joining me for another Bitcoin video analysis here for Greenbridge Investing. I want to thank you all for taking the time to spend here with me today. If you're new to the channel and you want me to look at a coin or a stock, please share it in the chat now. So once I get through my part of the analysis, I can go through your coin. Also, if it's an altcoin, make sure to put USD or USDT after the symbol so I get the symbol right. Okay, so with that being said, let's get this thing started here. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. And let's say hello. We got Travel. Hey, good to see you. Peter, Elizabeth. All right. Hey, Kai, good to see you. Ilya. All right. Schwartz, of course, my international man of mystery. Schwartz, thanks for stopping by from Romania. Winter Fresh from Romania. Yeah, my Romanians. This stream would not be the same without my Romanians. Okay, we got Wedge. Okay, cool. Thank you. All right. So yeah, we have market holiday tomorrow, Friday. I believe the markets are closed. Okay, the stock market here in the U.S. and all that stuff. Obviously, other markets will be open. You know, Bitcoin and all that stuff. But the stocks will be closed, and that's an important thing to consider. What's going on in the stock market right now? You know, it's green, all green yesterday. This is nonsense. This is basically holiday optimism nonsense. I would not put any weight in any of this price action as far as stocks and the stock market goes. All right, but let's get into Bitcoin here because we have a change in this structure. Now, someone in our other chat asked about, you know, are there any buy signals once it broke 50K? Now, many of you will recall that, okay, hold on. You'll recall that I said if it breaks 50K, right, if Bitcoin breaks 50K, then we have a change in the structure. And that would be the conservative thing to do, is to wait for the 50K break first and then look for buy signals. So you don't want to react to the 50K break. And by the way, this could be just a reaction to the stock market or whatever. I certainly would not be looking for longs right now in this. This is nonsense. Also, now this thing pushed some resistances, okay, which is this change in the structure, right? That's the main thing. These resistances got pushed. So moving forward from here, I would be expecting higher lows to develop instead of lower lows, which is what we kept getting before. Now, we barely made new lows over here. Now, a couple of weeks ago, I wrote about a buy signal on TradingView, and that was based on this candle here, okay? And since then, this thing just gyrated around, most likely stopped out that idea, and now here we are. So the lesson learned from that, by the way, is this zone, right, this entire zone was a zone where buy signals or some type of bullish reversal was highly likely, which means you shouldn't have been thinking short and you shouldn't have been thinking of selling in this zone because that's a support area. Why would you sell into supports, especially something that's generally strong and it's just showing us a corrective structure, not a trend, it's a structure, right, which means it's temporary and it's just a matter of waiting until the structure changes, right? Well, now we have the change. The market has proven itself. So here's what I'd like to see. You know, as far as buy signals go, again, I don't want to react. I want to anticipate. I would like to see a higher low develop in this area here, or possible double bottom. Now, the market may not offer those scenarios, right? It's very possible that it does not, especially if it wants to be ridiculous and just keep doing stuff like this where it just keeps producing vertical candles. So here's the other thing to look for. It's very possible if this momentum is going to stay intact, especially over the next week because we're in holiday mode, you might get two little inside bars, right? Two maybe little bearish inside bars. You may get something like that, like in this area here. And if you get something like that and the high of those inside bars is taken out, that would be a buy signal, even though it hasn't pulled back much. I mean, it's possible that this thing won't even go back to, like, what is that, 48? Yeah, 48,000. It's possible that you don't even get like a little test of 48,000, right? It's possible. So if you get those tight little inside bars, that would be an aggressive buy signal. Why aggressive? Because you're still buying into this minor resistance area. That's why, right? It's still minor resistance. It's not a support. Although it's not a major resistance. You're not buying at 69K. You're not buying, at something ridiculous like that. You're just buying at an area where if this thing fakes out, you're buying at the worst possible price. Okay? That's what you have to watch out for. The initial move carries the most risk, and that's why it's better to wait for a move like this, followed by whatever comes next. So as this new structure develops, I'm anticipating higher lows and higher highs. Okay, which means theoretically we should not see a test of 45,000 again. All right, not anytime soon. So if we see that, then this is a fake out. All right, and all bets are off. Does that make sense? That is what we don't want to see. If this over the next couple of days gives this all back and it's back at 45,000, then then basically the bearish structure is still in play at that point, and it's possible that this thing can test 42,000. But if this new structure is developing as it looks to be right now, then I would be looking for higher lows and higher highs. So again, the lesson to take away from this is, I think it's very possible that you see the two tight little inside bars, which would give you your aggressive long. If you go for that, again, the stop on something like that is going to have to go much lower than the inside bars. So you have to realize that. Typically, the stops on these things for swing trades on this thing is about 4,000 points, 4,500 points, something like that. It's probably a good idea to use that type of stop, because if you put it at the bottom of the little inside bars that develop here, you're most likely going to get tapped out, all right, when you get those tiny little inside bars. So just something to keep in mind. That's the aggressive scenario I would look for. As of right now, there's nothing to do but wait for one of those scenarios to develop. Now, many of the altcoins are going to be showing a similar look, okay? Some are outperforming somewhat, but many of them are probably going to be showing a similar look. It's all the same trade. So if you're not in Bitcoin, but you're taking something else, it's basically the same trade, right? If Bitcoin had failed and broke those supports, that altcoin probably would have broke its supports too. So just something to keep in mind. Use Bitcoin as your confirmation for your altcoins. And then, of course, you're using your altcoin chart to have specific numbers as far as your risk and your profit targets and stuff like that. All right, so that's my Bitcoin analysis. Pretty straightforward, pretty quick. Now, let me get into some questions here. Actually, let me just pull up real quick before I get into the questions. Let's just take a look at this, right? So this is the dollar index. You should always check this out, all right? Every day, check the dollar index. Even if you don't understand what you're looking at, just look at the dollar index, because the dollar index right now is, although it's been pulling back over these recent couple of days, right? The trend is still bullish. We haven't taken out any supports. That's why I have very little faith in the stock market, because as long as if this thing maintains its bullish structure, that means we're going into rising rates. And rising rates, the stock market doesn't want to hear about rising rates, all right? Or if they start factoring rising rates, it's going to eat into the profits of all these companies. So something to keep in mind. All right, let me get to your questions. All right, so Peter, can you have a look at, okay, so let's take a look. Sushi, cake. All right, let's take a look at cake. Cake. And they couldn't come up with any more creative names, huh? Sushi. Anyway, so, all right, well, here's the thing. That's a nice higher low. That's exactly what you want to see Bitcoin doing. Something like this. I mean, look, it took out these resistances over here, took these out on the initial move, pulled back, and now here's your new buy signal, right? You have an outside bar there. That's a buy signal. So that's a long. Your risk can be defined by the low of this candle. What's this candle low here? Basically 11.5. This low here is, what is this here? So you could probably define your risk at about 11.5. But you say money's coming out of these things, I don't know. It looks like it's changing because there's a higher low in place, established. I'd be expecting a higher high and a new bullish structure developing over the next few weeks, especially if Bitcoin can do the same thing. So not a bad looking chart. You're buying off of a low and there's a buy signal off of a higher low, right? In general, let's take a look at the weekly chart. I mean, these weekly charts aren't that impressive. They're not that good. I've seen much better charts than this. But you are at a support level, okay? And it has some room to run. Just because the weekly chart isn't beautiful doesn't mean that, you know, there's no opportunity there. You have a resistance right in here on this thing, 2052. So there's some room there for some reward, all right? Even if you don't get to 2052, even if you don't make it that far, if you can make it halfway, right, that still probably justifies your risk, or it still beats the risk that you had to take. So I think it's worthwhile. I think it's a worthwhile try on something like that, especially now that we have a new, you know, change in the Bitcoin situation, right? Bitcoin should be producing higher lows as we go forward. All right, so anyway, thanks for asking. Hey, Elizabeth, good to see you. Hey, Kai. Profit-taking areas for Ethereum. All right, so are you in Ethereum? Let's pull up my Ethereum chart. Did you take an Ethereum trade? Let's take a look. Where are the profit-taking areas? Let's pull up Ethereum here. Okay. So now Ethereum, this thing has been, it doesn't have the same exact setup, right? Same exact chart as Bitcoin. You have these, it hasn't actually taken out its resistance yet, right? Like Bitcoin has. But it doesn't really matter. If Bitcoin continues, this thing will continue. I wouldn't worry too much about that. These things don't have to be exact, right? Now, as far as profit-taking areas go, you're looking at, well, depends on where you're in from, but this is one, because it hasn't broken that yet, but that's a minor resistance. That's one. You have another one up in this area right here, right about there. What is that? That's 4423. Oh, I'm sorry, 4433 area. That area there. And then of course you have this resistance up in here, right? Those would be your typical profit-taking areas based on previous price history, right? Resistances that have proven themselves before. Those would be your areas. Now, again, when it comes to profit-taking, Elizabeth, just keep something in mind. It really, the effective behavior is, it should be a function of your risk. So if you risked, you know, let's just, for example, you risked $100, okay, and your trade is now up $200. It doesn't matter what level, you're up 2-to-1. Take some money off the table. It's just a good behavior. It's just a, you know, a best practice. So once you start getting beyond 1-to-1, like 1.5-to-1, 2-to-1, 3-to-1, those are great places to take money off the table because you're 3 times your risk. So don't worry too much about levels. So the charts can help us find levels where we can anticipate selling. So you could perhaps get out earlier, or you have some idea of how far this thing can go before it runs into some kind of problem. But really, you should be looking at it from a reward risk perspective, okay? And if you want to let some ride, like let's say you get most out of it, you get out of most of it at 2-to-1 reward risk, which is, there's nothing wrong with that. And you want to let some ride because you have some, and you're like, hey, why not? There's no sell signal. Then you let it ride. And then you see how far it goes, see how far it wants to pay you until it gives you a sell signal or something. That might be at 4-to-1. It may be at 5-to-1, right? There's no way to know. But the behavior, the best practice is letting it ride, letting the market pay you when it wants to pay you, okay? So I hope that answers your question. All right, okay, just getting through the chat here. Okay, cool. Thank you, Wedge and Chris. Tom, I would like mine looking at Atom. Sure, let's take a look. Atom, ATOM/USDT. Yeah, so I'm not surprised. Like I said, you're going to see some of these coins are going to be outperforming. Some of them are going to be underperforming Bitcoin. But look, broke all those resistances, okay? That's a good sign. That means that the structure is changing, all right? Just like Bitcoin. Now, in something like Atom, you don't want to react to this here because that's the worst possible price if this thing fakes out. You want to look for the higher low or the double bottom. So really what you want to look for is buying in that zone right there. Maybe this thing gives you the 2 mini inside bars that I talked about in Bitcoin as well, which would be an aggressive trade. And if you want to go for something like that, that's up to you. Now, when I talk about trades like that, the 2 little inside bars, which could appear, it barely pulls back. Okay, like you get 2 little inside bars like right here. And like, is that a pullback? It's not really a pullback. Should I buy it? It's still too high. It's still at the resistance level. But it's a mini pullback and then it breaks higher. It's possible. It's aggressive though. So the reason why I'm talking about that now is if you're interested in that idea, you need to plan for it now. You need to say, okay, yeah, if I see the 2 little inside bars and it breaks the high, I'm going to buy that because that's my plan. So now you're not reacting to it. You're planning ahead. Okay, so when you see it, you know what to do. There's no hesitation. You've planned it. So that's why one of the values to these streams here is having scenarios to anticipate, to prepare for. So when the market shows them, you know what to do. Instead of, well, what should I do? Is this, all these questions, and then you have doubts. Oh, it's still too high. No, it's a buy signal, but it's aggressive. Understand that it's aggressive. Understand what that means is there's a good chance, there's a much greater chance it can stop out. That's what aggressive means, right? There's a much greater chance that it doesn't go anywhere, just because we get the 2 little inside bars. But it is a buy signal. So what you're betting on is the momentum continuing. Because a lot of times when these things can't pull back, and the same goes for Bitcoin, when they can't pull back, that means the momentum is very strong. So that's what you want to be part of. So just keep that in mind. If you can handle that risk and you're okay with the higher chance of getting stopped out. There's nothing wrong with getting stopped out. All right? Just as long as you're sized properly, you know what you're risking, and you're willing to take that chance. All right? This game, people seem to think that there's like a skill to this game. There is no skill. This is basically gambling. All right? I mean, whether you're investing in stocks, that's just academic pretense. Oh, I'm an investor. I don't gamble. I'm an investor. No, you're gambling. Okay? Just like a casino. Casinos draw people in because they have people that win in the casino. And since you know that people win there, you know that there's a small chance that you can win too. So it gives you hope. And the stock market and these coins, they do this all day long. They draw people in with hope. So you need to understand that this game is stacked heavily against you, and that most of the time you will not win, or you can't win. So the way to protect yourself from that, or the way to position yourself so that you're in a better chance to win, is to wait for very particular situations where your probability is greater. And those situations are rare and they take time to develop. I mean, look at that Bitcoin situation. It took 3 weeks for it just to break that resistance. 3 weeks of it gyrating around, buy signals, not going anywhere. And if people are impatient and they're buying into that, there's a good chance that they got stopped out a few times because they couldn't help themselves. And now the buying is starting to develop. And and even now, if they're impatient and they jump into it, it may possibly pull back and they get stopped out again, right? Because again, they're not paying attention to the probability of the location. All right, so that kind of all ties into Adam. Thanks for asking. Let's see what else we got here. Travel. What about anecdote or short or story about your Wall Street? You want to hear about your Wall Street days? Those were very good days, I can tell you. I mean, money was very easy to be made. Everyone made money. And so there's a good lesson in that, because people think that, oh, yeah, he worked on Wall Street, right? He must have had inside information. No, I worked at a day trade firm. It was basically a place where they were a broker. You opened an account with them, and then you get to work in a group of traders that were all basically doing the same thing. Now, there were some big guys in the office, guys they made a lot of money, and they would fund smaller guys. There had to be about 200 or 300 people in this office. It was a big office. And the reason why I was able to make money, now I had no idea at the time that this is the reason, But the reason why I was able to make money back then is because we had a very, very specific advantage, and that was speed. Because back in those days, we're talking 1999, 2000, right? Those days, first of all, algos like we have today were very limited. They existed, but they were rare. They weren't, it wasn't like 40 or 50% of the volume that's transacted or more today by market making firms with their algos. We didn't deal with that. Back then, market makers were people, at a company like Goldman Sachs, because you would see them on the quote, on the level 2 quote, because that's what we used to use. We never used charts back then. I know it's hard to believe, but people made all kinds of money, and we never used charts. Charts were like this abstract idea. We would have one chart. We'd have a computer between two guys, right, sitting next to each other, one computer with a chart of like Intel on it. And our screens had level 2 quotes, and we would just basically be looking at the quotes, the level 2 quotes. And we had the S&P futures pit there was a speaker overhead where they basically were plugged into real-time S&P futures feed, so we can hear the activity in the S&P futures. Now, the idea was relative strength, right? That was the basic strategy that they said, look, if your stock is relatively strong and the S&Ps are being bought, you should buy your stock. If your stock is relatively weak, and the S&Ps start to sell, you should sell your stock. I mean, it was like that. But none of that really mattered. The reason why we made money was because of that speed advantage. Back then, retail traders, the average retail trader was a point-and-click trader on their E-Trade platform at home on their desktop computer. So their quote, by the time they reached the market, we were on the other side of that trade. On top of that, stocks were in fractions back in those days. And that was another part of the speed advantage because markets were inefficient, right? The way people would get filled, I could sit there, I could high bid the entire bid, right? The entire national bid on a stock. I can pop up in front of everyone, a 16th higher than everyone or a 30-second higher than everyone. And then when that point and click guy at home presses the market order to sell, I'm there to get it. And I'm automatically, getting an advantage because I just made the spread and, all that kind of thing. So that spread adds up. And we paid some ridiculously high commissions compared to the way commissions are structured today. And we still made tons of money. But that's the reason why we made money and never had to rely on charts. It's because we had that advantage. That advantage was taken away by market-making algo or Wall Street algo firms that basically play that speed game. They took that advantage away. So that's why you can't read a level 2 quote today and make any money. But back then, you could. Back then, like you could see a market maker like Goldman Sachs would be sitting there on the offer, and then he'd be using his ECN like Instinet, and they would be selling. And look, the guy's selling. Oh, okay, so get out of his way or sell too. You could front run him or whatever. Like it was that simple. It was people you were dealing with, right? Not robots. So today, it's a much different game. Markets are more efficient. So the lesson learned is if you're not capitalizing on a specific inefficiency or imbalance in the market, you cannot win. Okay, because markets are efficient. You can't win on a consistent basis or beat the market on a consistent basis, especially on smaller time frames, right? So people make money investing. You hear about famous investors. Oh, Warren Buffett and all these other people, right? But they're in the long haul, right? They buy and they hold forever. That's a different game, right? You're not competing with algos in that game. But when you think that you're going to like trade, day trade stocks, or you think you're going to day trade Forex pairs, which is really far-fetched. It's so against you, right, that you cannot win. Same goes for like these companies like, what do you call it, Robinhood. They sell your order flow. All right, I'm going to just say this and then I'm going to move on because you get me started. I could talk about this stuff forever, but I have some more questions to answer. There's a company called Robinhood. They sell, if you look at their fine print, and a few other brokers do this as well, they sell your order flow to a market-making firm, right? Which means when you take a trade on their platform, but it's commission-free. It's not commission-free. You're paying some kind of spread most likely, and most likely you don't have much of a choice. I don't know. I don't use the Robinhood platform, but I do know that they sell your order flow. If they sell your order flow, the other side of the person on the other side of your trade is a market maker. Okay? You can't win if the other side is a market maker, because it's like the casino, right? Just like a Forex dealer. There's a conflict of interest there. And they can see a lot more information than you can see, because a market maker is managing an order book. Okay, so they can actually get a much better sense of order flow. They can see the orders, right? Order flow is being sent to them. So when a lot of buy orders or sell orders come in, they can see all that. You can't see it. So anyway, just a few things to keep in mind. But the lesson to be learned from that is you really need to have some sort of proven statistical advantage, or taking advantage of some kind of specific imbalance. And otherwise, you have no advantage, and you're just gambling. All right, so thanks for asking about that, Travel. Yeah, don't get me started on my early days. I talk about that stuff all the time. The parties were really good, too, back then. All right, so let's see. Okay, cool. Erin, thank you. Okay, let's see. Here up. Okay, I'm not sure what that is, if that's a language, but thank you. Kai. Okay, Nasdaq. Oh, you want to see the Nasdaq? Okay, cool. No one asks about that. Let's take a look at the Nasdaq. NSX USD. Now, like I said before, these things are in nonsense mode. This is holiday mode. I talked about this earlier in the week. I'm not surprised to see this. I have zero faith in the stock market. When the stock market does something like this, all right, as you can see, we have the resistances up in this area here. I mean, look at this thing. It's back in the resistance zone. It's basically getting back up in there. People that buy stocks now are really should have their head examined, because the risk here is very high. Look, but it's going straight up. Right, but you're going to a resistance area, and there's a lot of reason for selling to come back in this area here. So great place to take profits. All right, great place. If you managed to get in earlier, great place to lock in profits, take something off the table. If you have swing trades, great. But this is holiday price action, all right? And we're back at a resistance. I have no faith in this at all, and these are bad levels to invest in. I would not touch any stocks for the long term at these levels. It's possible, sure, that we can break higher, but the thing is, if the Fed continues on their around, at some point the Fed is going to have to start a tightening cycle, and this stock market party will be over. I don't want to be caught at the top of that. All right? I'd rather, if anything, be caught at the bottom of it, if there's a bottom. All right, some kind of bottom, if anything, because that's where the risk is more attractive. So that's the Nasdaq. Again, don't get sucked into this holiday stuff. This is just nonsense. Low volume holiday nonsense. Don't think that, oh yeah, the stock market's okay again. It's not. We just looked at the dollar index before, and while the dollar index looks like it's kind of pulling back again, the trend hasn't changed. The trend is still bullish. Here, let's take a look. The reason why I look at the dollar index and I look at the bonds like every day is because they give us clues about the future. They give us clues about interest rates, right? And interest rates control everything. Interest rates are a factor in everything. Look at the bonds, right? These are the bond futures. Look at this. So the bonds are stuck in this range. They're going lower again, which means rates are rising. Now this thing takes forever to move. What this thing needs to do is take out the low. Right? This thing needs to take out this low. We take out that low, we're in a rising rate, right? That would just confirm further that we're in the rising rate environment. Now, I know that the Federal Reserve has been very cool and calm about talking about that. And they have these FOMC meetings. I don't know what the guy says, but clearly he's not hawkish, right? But at some point that's going to change. And when that changes, like, I don't want to get caught at the top. Maybe the market has some more room to run, but I think it's okay if you're taking swing trades and you're trying to just take small bites, or maybe you're taking some day trades in some stocks or whatever. But longer term, no way. No way. Too risky at these levels. So I hope that answers your question. All right. Let me see what else we got here. Okay. So Todd. All right. Adrian. Hey, Adrian. Thanks for stopping by. Todd, you sound a bit sad, or just maybe hopefully I'm mistaken. Sad? No, oh no, I'm not sad. I'm just fighting a cold. So, yeah, maybe that's why I sound sad. But I'm not sad. Okay, Adrian, I'm on holiday in Egypt. Oh man, that's got to be interesting and nice over there. I'm sure it's a lot warmer than it is here. Thanks for stopping by. Hey, Kay. All right, Kai, it's gambling with a system. Right, Kai, you're right. I mean, it is gambling, but it doesn't have to be uninformed. I mean, look, the game of poker is gambling, but there are certain things that you can do to improve your outcomes. Although there's still a very highly random nature of the game because the cards are going to come out the way they come out. But you can, because we know that there are four suits of every type of card, right? There are four queens in a deck. There are four aces. There are four kings, right, of every suit. We know that. Because we know that, and you look at the cards in your hand and you look at the cards that are on the table, you can basically get a sense of your probabilities, right? And you, with that information, you can manage your risk. Now, here's an interesting thing about poker and the markets. I'm very fascinated with the relationship of poker and the markets, because I think if there's any game to really improve your market timing, is poker. But the market and poker also have many differences, okay? But there are some similarities when it comes to risk management. Now, one thing, if you notice about poker, you don't see the same winning people in these tournaments. Sometimes, watch these tournaments on TV, and these big tournaments where they win $1 million. You don't see the same guys year after year after year. I mean, some of them get up to the top tables, but you don't see the same guy or the same girl win year after year. But some of these people have been playing poker for 10 or 15 years, maybe longer, right? So what does that tell you? That tells you that no matter how long you play poker, it doesn't matter if you've been in it for 5 years. It doesn't matter if you've been in it for 1 year. Some brand new novice poker player, the cards may have just come out for this guy the whole way up, and he wins the tournament. And he's just some novice moron that just happened. That's poker, right? And I think the market works the same way. There's no linear progression. It's not a learned skill, right? If you think of trades, for example, like welding, okay, you start out as an apprentice welder. I know nothing about welding, but it's just an example that comes to mind. You start out and it's a skill, right? You learn how to weld, you do basic things, and then over time, you get better as a welder. And then after a certain amount of years into it, you can command a lot more money because you're an expert welder, right? Kind of like that. Well, the markets don't work that way. So at the same time, while there's no learning skill, like progressive learning skill like that, at the same time, it's possible for you to have larger gains than what would be relevant to your skill level. Okay, like if you just happen to put on a bigger position just because you were feeling good, and now you're making $10,000. Meanwhile, the guy that's been in this 10 years only makes a couple of thousand because maybe he's gotten beat up and he knows the risk. But then you have a new guy, he doesn't know the risk, and he makes all this money. Oh, that's easy. Yeah, but that same behavior is going to be costly, right, in the long run. That's why people that have been doing this for a while tend to lean more toward the conservative side. There's nothing wrong with being aggressive at certain times, but with experience, you at least learn when it's more appropriate to be aggressive and when it's not. Most of the time, it's not. All right. So anyway, thanks for asking. Okay. Nice to finally about your. Oh yeah. Okay. Yeah, I was there for a few years. It was a good time. That's how I got my start in this business. All right. Travel. Thanks for your. Okay. Okay. Cool. Adrian. Yeah. Yeah, those were some wild days, I can tell you. All right. Especially with the kind of P&Ls that, because back then, we had the old CRT computers, right? We had the old CRT monitors. It wasn't like flat screens. So also the software that we used, the P&L was showed on everyone's screen. So you could just walk by people's computers and see what they made or lost. And when you saw some of these numbers, I was really young and dumb back then, so I wasn't able to appreciate those numbers. I thought that was normal. Okay, boy was I dumb. Anyway, all right. So let's see. Just going through the chat here. That is very cool and interesting. Cool. All right. Next time, I guess we'd like to hear about I can't talk about those because just watch a few movies about, Wall Street parties, and I can say that there are definitely some similarities. All right. I mean, think of it this way. It's like a big frat party, right? I mean, I was never part of a fraternity in college, but just think of it that way. What goes on at frat parties, kind of like that, except a lot of money involved. Okay, so let's see. All right, Ilya, can we have a look at CRV USDT? Sure. CRV USDT. Let's take a look. All right, what's going on here? So that's a nice move right there. Let's take a look at a weekly chart first. All right, I want to see what the bigger picture says. So this thing right here, look, this is an interesting change relative to where it has been. Previously, this thing gave us a lower high here, and then look, it turned, and since then it's just been producing higher lows and higher highs, almost to new all-time highs. Let's see, where is the? Oh, wait, hold on. Is this a bad tick? How high is this over here? 23.25. I don't know if that's true, if that was like its first day or something. So if that's the high, then we're nowhere near all-time highs. But relative to recent structure, this thing has a higher low established right here. And here, let me put this in here like that, okay? And it's going for the higher high, right? You're in there like that. Now, this is not, in my opinion, this is not a good location for a new long because you have all this resistance here, okay? You have all of this, you're fighting and you're going right into this here. So if anything, there's a good chance that it fakes out. Now, if you're aggressive, right, this calls for a breakout. This is a breakout type of trade if you're into that, okay? But when you take a breakout type of trade, and buying this thing now, by the way, is probably the worst possible price because this thing is most likely to fake out very soon. You have to babysit these things very carefully. And if they do the wrong thing, you need to make an adjustment. Otherwise, you get stuck in these things. So let me just show you an example back here. If you buy the breakout, like these people bought back here, right? You buy the breakout and you're like, yeah, all right. And then it turns into this bearish pin bar. That's not what you want to see. Now, although it tried to come back there a bit, as you could see, the thing gave you a hard time and pulled back. Now, the only thing that saves you in those situations is hope, okay? And a lot of people have hope. They don't realize that hope is a really bad thing. But hey, the market rewards you for it, right? So, oh, okay. I just hold on to it and eventually it comes back and now look where it is now. Oh, I'm so glad I held on, right? That same mentality is going to cost you everything when these things turn the wrong way, and they will at some point. But so as far as right now, if you're going to go for the breakout, you need to be on the lookout for the failure, and that failure can be a pin bar or something like up in this area here, right? Pin bar, bearish candle, bearish inside bar, takes out the low of the bar. You should take your loss, okay, or whatever, if that's what you're into. Otherwise, if you're into if you're interested in a long, then you're looking for the higher low. And these still are not the best levels, right? You still have like this whole area is kind of like a resistance. But if this thing wants to continue to trend, and if Bitcoin puts a bullish structure together, perhaps this thing will trend further, okay? So maybe there's a swing trade opportunity in there, right? The goal of the swing trade, of course, is just to do better than what you risk. So maybe you get the higher low, maybe you get the double bottom, okay? Those would be the ideal. Any type of buy signal that appears in that zone right there would be ideal. And that would be much better reward risk and better probability that the trade produces a positive outcome. Does that make sense? And if it breaks instead, let's say you get that opportunity and instead it breaks that support, then the trade is no longer any good, right? You have to respect that loss if it's a swing trade. If it's position trade, if it's like a position trade or an investment, it's a different story because you're not using stop loss orders for investments. but you really have to be careful with your sizing in that situation. I'm assuming you're talking about swing trades. So anyway, I don't think most of these altcoins, I don't think they're good choices for investing. I think, you know, if you're going to invest in this space, you might as well go for the highest quality you could find, something like a Bitcoin or Ethereum, because most of these coins, they look spectacular now, but they're, you know, there's not much behind them besides hype and marketing. That's the problem. I don't care how great their white paper is, and I don't care how great their story is, and they're going to do this and they're going to do that. It's all just nonsense and talk. There's nothing behind most of these coins but good marketing. All right, just look at all these clowns on YouTube that basically make a business out of their channel, drawing big crowds to their ridiculous titles, and you know, people clicking on their affiliate links. Meanwhile, these fools are getting $25,000 to push a coin. Fools! I'm the fool. You know what? Actually, I'm the fool because I get paid nothing, and I talk about these coins for nothing, and these guys are getting $25,000 to talk about a garbage coin for 3 minutes. Imagine that. Anyway, so who's the fool? Me. Anyway, all right. Let's move on here. So that was CRV. Okay, let's see. Hey, Kim, good to see you. Solana, let's take a look. Let's take a look. What's going on with Solana? SOL, USDT. Ah, all right. So, little pullback there. So, Solana, this is not a bad looking chart. I mean, higher lows. You have a higher low established right here. That's nice. Bullish pin bar, right? All good. Buy signal at 80, what is that? I'm sorry, 189.43. So 189.50. This thing's at 190. This thing's at, okay, so basically 191.25 right now. The high here is 189.43 on that pin bar. So that's a buy signal. That's in play right now, okay? And it's coming off of a nice clean cut higher low. So if you're in this, I mean, there's nothing to do but let it do its job now. If you're not in this, and you're interested in it, I mean, it's only a couple of points away from that buy price, right? It's not perfect, but your risk is not going to be affected that much if you buy into this. The low is 148.04. That is where your stop should be, right? Actually below that. So probably like 147.50. That is where your risk is defined on this thing. So, you know, like in a situation like this, maybe you like the buy signal, you like this coin. I mean, the coin has a generally bullish structure. So theoretically, the higher low should lead to a higher high over the next few weeks, right? Unless Bitcoin, of course, fails to follow through, then you'll probably see this thing produce a lower high somewhere along the lines and all that kind of stuff. But if you've justified your risk at that point, or maybe you're just green, right? Maybe you bought this thing and it's starting to go the wrong way, but you're still green, take it off, take the money off the table before that thing turns red, because it should not give you a reversal signal. If this thing is going to make that new high, you should not see a sell signal in that area. You may get some gyrating prices and this and that, but you should not see like a bearish pin bar develop and a break of that pin bar low. I mean, that would not be bullish momentum. Does that make sense? So you have to decide if you want to take that type of risk. I mean, you're looking at, you know, 40 or 50 points of risk there. And how do you adjust for that? Of course, you're sizing. So, you know, if you normally buy one coin, perhaps you buy a half a coin. You know, keep in mind, your risk is going to be a function of how much money is in your account. If you have only $2,000 or $3,000 in your account, you can't really afford to take a whole lot of risk, because your risk for swing trades typically should be between 1 and 3%. That will protect you from having a lot of losses in a row. But if you're taking risks that are greater than that, 5%, 10%, you're going to wipe out your account. Over time, you will wipe out your account, especially if you're taking bigger risks to try to make the money back that you've lost. So just something to keep in mind. I'm not bringing it up for you specifically. I'm just saying in general, because it just comes to mind. Okay, so thanks for asking about Solana. Not a bad looking chart. There is a buy signal there. Okay, Cardano. Let's take a look, Farhat. Cardano. What's going on here on Cardano? I remember someone was asking me the other day about Cardano, and then he said, please don't get mad about Cardano. Because I guess, you know, I get on these Cardano rants. And the reason why I get on those Cardano rants is because I've come across so much hype on this thing, and all it's been doing is going lower. But all right, let's take a look at where we are now. As you can see, I have a bunch of lines on this chart. This zone right here, and we talked about this on Monday, that's a buy zone, right? And look, we do have a buy signal in Cardano. Look at the inside bar from yesterday. Took out the high of that inside bar. The high was at 135. Now we are right now at 146. So a buy signal is in effect on Cardano, which again should not be too surprising because we saw it on Bitcoin. You know, we see a lot of this action on Bitcoin and Ethereum and all that stuff. So I'm not too surprised to see these buy signals going off on these coins. But like I said, these things don't move on their own. So if Bitcoin flounders out or, you know, just basically fakes out, then these buy signals aren't going to go very far. So just that's something to keep in mind. It doesn't mean you have to avoid the buy signal. Just understand what can affect the buy signal. And it's usually a good idea to use Bitcoin as like your gauge, all right, as far as signals go. So anyway, you have a buy signal. Your risk would be defined at, what is this, $1.18. So maybe you want to give it a little more room, like $1.16 or something, right? Your stop would go somewhere there. And then this thing should be doing its job, right? The first resistance on this thing is here, which is what? What price is that? $1.80. So if you're buying this thing, that's about 40 cents, right? For your first target is about 40 cents. And your risk is about, what is that? About 30 cents at this point. So it's slightly better than 1-to-1 at that, you know, reaching your first target. That's if it only gets to here and doesn't go any further than that. Okay. Theoretically, this thing, if this bearish structure is broken, which it's possibly broken now because we took out a resistance, we have the higher low, all that stuff, then this resistance should break and this thing should start working its way higher. Now, don't expect this to go in a straight line, right? Like we have these straight lines like back here. Like this nonsense, okay? Understand that what drives those moves is just hype and marketing. So that's it, right? They have a good marketing team and they get the message out, whatever it is that they're doing, and they suck in a lot of people who have no idea what they're doing, but they're chasing millions. They're going to be all millionaires, right? You don't want to be one of those people because everyone gets rich off of those people. Now, so what you could possibly get is, you know, these things start moving higher, but then when it gets to a resistance like this, I wouldn't be surprised if we see some bearish price action. So that's why you want to be prepared to, excuse me, to take money off the table when your reward risk is has a positive ratio like 1-to-1 or 1.5-to-1, 2-to-1. And I think if you just stick to that and you let the market run like when it wants to run and it's paying you 2-to-1, 3-to-1, that's really where you can make some money and outperform your risk, which over time should make you profitable, right? But it's letting that winner run, but taking money along the way. People think they're just going to hold on to their entire position and sell the whole thing at the top, but that's just greed. It's a very good idea to take some money off the table on the way, because you know how many times these things fake out, and that gives you an opportunity to lock some profit in, pulls back, and now you have an opportunity to buy some more, you know, in the future. And instead of having one, you know, trade, now it turns into multiple opportunities, right? Does that make sense? But that will only come from expressing the effective behavior, because that's really the only thing that we can do consistently. The market's highly random, right? Like I said before, it's highly efficient. And most of the time, we're going to be wrong, or we should expect to be wrong. That's just the way it is. All these fools and all these clowns that are bragging about blah, 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 they're making millions and blah, 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 it's fake. And YouTube incentivizes that type of behavior, by the way. And also on top of that, the herd needs hope. Okay, so that's why you see all that nonsense. And these people aren't making that kind of money. They're getting rich on the promotion and on the the advertising and the affiliate links. That's where they're getting rich. They're not getting rich on the altcoins. All right. Now, there are lottery tickets where some people happen to buy something really cheap and it has 10x. Right. But those are lottery tickets. They're rare and they're not the norm. So understand that. Having the right mindset will at least give you a healthy perspective on these things and not get caught in hope mode. Because yeah, hope mode, when the market is generous and everyone's getting paid, right, everyone's a genius. Okay, a rising tide floats all boats. That's an old saying. Everyone's a genius. Everyone knows what they're doing. Blah, blah, blah. When the market really goes into pullback mode or these things go out of favor and money's coming out of them, like seriously, and the market's not generous anymore, any money that people made during that good time, they're going to give it back. Okay, probably all of it plus more because they're going to have the same, all those bad habits that made them all that money, they're going to learn why those habits are bad. Okay, so just something to keep in mind. I talk about that stuff all the time, and that's why I'm so unpopular. All right, Alex. Hey, Alex, good to see you. Kai, say no more. Message received. Okay. AMC, sure. Let's take a look. AMC. So when it comes to AMC here, let me go back. I'm on a weekly chart here. Let me go back to a daily chart. So here's AMC. I mean, the weekly chart would have been just fine too if this. Let me just take a look at GME real quick. All right, look, GME is not really going anywhere either, right? These are out of play. So AMC, we all know that this was part of the whole Wall Street bets nonsense, and they squeezed out some institutions that were all short, right? Anyway, let's look at this from a technical perspective. So on something like this, you have, look, this support on AMC. See this support level right here? That shouldn't have broke, but it broke, right? But here's the thing. It broke and it recovered. Okay, that's a positive. So now that it's recovered, you know, it's back above in that area. You're getting a pin bar, a bullish pin bar today, right? This market's closed now, or it's going to close in a couple of minutes here. So it's a nice bullish pin bar, possible support area here, because usually this old support, when it has like a break and comes back up, a lot of times, you know, that support will be active again. So this could turn into a swing trade long, right? If it takes out the high tomorrow, which is, but tomorrow's closed, right? So Monday, if it takes out the high, what is that? 29.38. 29.38 is the high. So you take that out, that's your buy signal in this thing. Your risk would be defined by this low of 26.83. So this thing really should not be going back into this area. That's the higher low. So it should make the higher high, right? Theoretically, that's what it should do. Now, how far can this thing go? Or where is the next resistance? Well, you have an old support over here. See that? So this area right here, that would be a one area or potential price target. What is the high here? 33.89. Okay, so if you're buying this thing at 28.66, so let's just say you're buying it just above that. Say you're buying it at, let's just give it some room, 29 even. Okay, and you have to risk basically $2.50. Okay, if this thing can make it to 33.89, basically 34, I mean that justifies your risk. So it's, if you want to go for something like that, you can justify your risk, and that's reaching the first resistance. If this thing wants to go further than that, then you have yourself a nice little trade. But you know, you have to assume that it won't go much further than the first resistance, unless it proves otherwise. So yeah, not bad, not bad. I like that. I like that idea. Keep in mind, something like AMC, these things, they're highly speculative. You know, they move on day traders pile into this stuff. I mean, is the company any good? I don't know. I don't go by fundamentals anyway. But the structure is there, and that recent change, right? How it came off of that support break, broke that support and came right back. I mean, that's a pretty good sign. That is a change in momentum. So now it should start producing higher highs from here. But how far that goes, there's no way to know. Just like back here. This was a bullish structure, right? All this back here. And at some point, you know, it found a top and then it consolidated for a month or two. So just something to keep in mind. When something changes its structure, don't assume that, oh, okay, I got the next bullish trend and this bullish trend is going to carry this thing to 100, right? There's no way to know. So when it gives you a hard time, that's when you should start making adjustments. But at least, you have the areas, you know them in advance where this thing should be giving you a hard time. And then you wait for the signs. All right. So thanks for asking about AMC. All right. So let me see. Just going through here. Ilya, I'm in since $3. So looking for a nice exit point. Okay, Ilya. So you're referring to, which one are you referring to again? I have to go back because I can't remember. Which one did you ask about? Oh, I can't see it here. All right. Well, I hope what I covered there helped you. Yeah. Oh, CRV. Okay. Yeah. So if you're in from a lower price. So basically, the areas to look for trouble. And at this time, there's no trouble there yet. Okay. But you just want to be prepared. Okay, Elizabeth, if you have time, what would you give a highly mathematical teen? Wait a minute. Let me go. What was that question there? If you have time, what advice would you give a highly mathematical teen about trading and investing? That's an interesting question, Elizabeth. What advice would I give a highly mathematical teen about trading and investing? Well, for one, learn investing, think bigger picture, and don't day trade. Okay, because you're just going to waste a lot of time. Go into if you're interested in markets and you want to pursue some kind of career on that side, definitely, and you're mathematical to begin with, definitely pursue. There's plenty of educational tracks that steer you toward like the financial engineering track, which now you're playing with the top minds there, right? Now you're playing with physicists and basically the guys that write those algos that basically make the market as miserable as it is. That's the game you're playing. Usually those people, they're called quants or quantitative analysts. They usually get paid a lot of money. Okay, I mean they usually start out at like almost 100,000 a year. Okay, that's just starting out. Just as like a first year quant out of school. But of course, it's a lot of schooling, and they're not learning any kind of, there's no magic to what they do. They just can quantify things in a particular way, and they're playing an engineering game. They're solving an engineering problem. They're not sitting there looking at charts and saying, oh, well, there's a high or low over here. They're not playing that game. They don't have to play that game. Their goal is to take the smallest amount of risk possible and make as much money as they can, within the scope of that risk, as much as they can, as frequently as they can. So those numbers could be like, when they're wrong, they lose $6, but when they're right, they win $12, right? For example. Now I say, well, that's not much, but that's a 2-to-1 ratio. And if they can do that with millions of shares or huge positions, basically, that equates to a lot of money, right? And market-making firms have the resources to do that. That's why these people work for market-making firms. You figure, why wouldn't they just work for themselves? If they have the knowledge and the mathematical knowledge and the programming knowledge to put their own algos together, why would they have to deal with the stress and the political nonsense that goes on inside of a company, right? All companies, it's never fun working for a company. Unless, of course, you're getting paid tons of money and they just party all day. But usually it's stressful and there's a lot of work involved, right? And they have to work a lot of hours. And why would they go through all that when, if they had that knowledge and experience, they come out of school, they come out of MIT, right? They come out of school, they have this knowledge, put some kind of algo together or a series of algos and just hang out on the beach all day. Why don't they do that? Because they can't. Right? The market-making firm has the resources that they need because you need large resources. Not only that, but you need political connections because a lot of these market-making firms are politically connected. And that gives them an advantage that even over amongst their own peers, it gives them an advantage. So, we can't even compete. As retail traders, we can't even dream of competing on that level. All right, so thank you that's the advice. I know that was very long, but that's the advice I'd give a teen. Learn to invest. You know why? Investing is not as stressful. You don't have to sit there and pore over computers and charts and all this other nonsense, which is, there's no advantage to it anyway. So investing longer term, you wait for some opportunities. Like the stock market right now is not in a good place, right? But when it pulls back seriously, which we haven't seen in a while, there'll be an opportunity to maybe pick up some stocks. Now, over time, you start accumulating positions in certain stocks. That would be probably a lot more productive than trying to day trade. Also, another thing to keep in mind or consider is something called reinvestment. There are these things called drips, right, where they reinvest your dividends from the stock, and they basically, you're buying more shares with it. Just Google that. There's companies that specialize in that. So, you buy some shares of Intel or you buy some shares of Walmart, and when they pay their dividend, that money goes into buying more shares. So over time, the positions will compound, right? The value will compound, but over time, meaning 10 years or 20 years. That's when you see the results of that. All right. So anyway, so it's a much different game. All right. Thanks for asking. I know it's a very long answer, but I hope that helps, Elizabeth. Ilya. Okay. No problem. No problem. Farhat. Okay. No problem. Adrian, what is your full job? What is your, okay, hold on. What is that question? What is your full-time job nowadays? I'm unemployed, Adrian. No, I do the signal service, and I take care of the Greenbridge stuff, and I trade. I mean, that's what I do. I don't work for anyone. So that's my full-time job. It's not easy at times, but that's what it is. After some of the stuff that I've been through with working for others, I've made a conscious decision not to work for others anymore. So that's my full-time job. I work on that, and I'm working on some other stuff, some other projects, which you'll find out about soon. That will also help to build my personal brand, if that makes sense. But that's you could think of me as like a YouTuber, even though I don't have a top YouTube channel or anything yet. So thanks for asking. Let's see what else we got here. You ever review Link and Euro? Let me see here. Is that right? Review Link and Euro. Okay, let's take a look. Link. Let's start with Link. Link USD. Yeah. So not surprising, right? Similar to Bitcoin, broke these resistances here. So you have the change in structure, right? If you look back at the previous videos that I've done, we talked about waiting for the change in structure. Well, we got it. This is it, right? That's the break. So like I said before with Bitcoin, you don't want to chase this. This carries the most risk. You want to wait for the pullback, right? You want to wait for some kind of pullback, and that zone would be in here somewhere. Wait for the higher low, possible double bottom. If you don't get it, which is possible, right? You may not get it, and you want to go for more of an aggressive signal, then it would probably be wise to wait for the it's usually two little inside bars that develop. Like they don't really pull back, they don't really go anywhere. And then it's followed by a break higher like this, right? It looks something like this. And that's possible across the board, right? I've talked about that. That would be an aggressive long. So prepare for it now, if that's what you're into doing, right? Prepare for it now. Your risk is going to have to go below that this little inside bar area here. It's going to have to go significantly below that, because a lot of times price will retest that area and stop you out, right? If this thing fails, because when it gets into this area right in here, there's a good chance that it can fail. And if you just bought into that, you just bought at the worst price, but that's a chance that you take, right? As the aggressive long. Now, what's in your favor in this situation is the fact that the momentum is changing, right? We now have a possible bullish structure developing. So that's what you're basically hoping follows through. Now, I talked about before, hoping is not a strategy. So you have to, if you get into a situation like that, be prepared for what can go wrong. And when it goes wrong, do something, right? Adjust, get out, tighten your stop, take the loss, take the small gain, whatever it is, do something. Put your stop to break even, right? The idea is you're controlling risk. All right, let's take a look at the euro. Now, this euro has been very uneventful over recent times. Now, generally, this euro, the general structure has been pretty much bearish. Let's go to a weekly chart real quick. I mean, look at this, right? Look at this euro situation here. So it's actually, this is the weekly chart, and you're fooling around an old support, an old resistance, which is likely to act as a new support. Also, I mean, this is a possible broad high or low. So you have that going for you here, and it's trying to turn around. The thing is, you know, for these things to follow through can take a while. So as you can see, within that context, right, you'd be expecting some sort of bullish structure, and here we go. We have a higher low in place, and it's trying to give you a higher high. So you have this consolidation, but it hasn't made the higher high yet. You're just fooling around in here. Now, earlier I talked about the dollar, and I talked about how the dollar is still in a bullish trend, right? So if the dollar continues that bullish trend, this is probably going to turn back lower. So you got to keep an eye on the dollar for this one, and that dollar, you know, with the bonds looking the way they are looking, I don't trust this thing. Now, maybe for a swing trade you want to take a quick bite, but even now you're buying into this little resistance. So I would wait for some kind of pullback or something, or break first, then pull back, kind of like what Bitcoin's doing, that kind of thing. Otherwise, I wouldn't touch this thing, because there's too much that can go wrong with it, especially with that unclear dollar situation, right? I mean, the dollar's been consolidating, but it's consolidating within a broader bullish trend. So if that continues higher, this is not going higher. All right, same for gold and all that stuff. Anything that trades against the dollar. That's why I have no faith in the stock market at all, because the bonds are pointing to a rising rate environment. If we go into that, the party's over, right, in these things, at least for a short time. And I don't want to buy the top. All right, so anyway, thanks for asking. That was Link in the euro. All right, I always struggle with with what? Let me see. With profit taking. Do you have a strategy? All right, so to answer your question, which I mentioned before, Chris, use reward risk. Don't use levels, just use reward risk. Obviously, it's not the profit taking, it's probably what's getting in the way is greed, because you're trying to maximize everything you got, but then the market gives it back and it turns into a mess. Look at it this way. Look at it from a perspective of risk. If you're in and the market right now, your position is greater than a 1-to-1 reward risk. Okay, you risked $100 and your profit right now is $150. Start taking money off the table. Okay, but you say, well, but this thing's going to go higher. It doesn't matter if it's going to go higher. The right behavior, like I said earlier, the effective behavior is to start taking money off the table. Use reward risk ratios. All right, so 1.5 to 1, 2 to 1. Maybe the market's very strong and there's absolutely no reason to sell. You should at least take something, right? Even so to adjust for that, like maybe there's no sell signal. It's super strong. It's vertical, right? Candle is vertical. Take 10% of the position off. If you're at like 1.5 to 1 or 2 to 1, start taking the position off. Start closing the position. Start locking your profit in, because what you're doing is you're reducing the risk, right? So now if it gives it back, hey, you locked something in anyway, and your risk is smaller. So that's what you want to do. And then what you're waiting for is some sort of reversal. So you can predetermine your resistance levels or your targets and say, okay, it's probably going to stop here. It's probably going to stop there. Okay, and then when it gives you a hard time, then you could take more off. But at the same time, you're trying to give the market room to run if it wants to run. So when you get in this, like when a market wants to run, it just prints vertical bars pretty much, and it doesn't produce anything adverse. You don't see any bearish pin bars. You don't see any bearish inside bars. It's just green, green, green. Okay, well, kind of like the way the Nasdaq looks right now. That's a market that wants to keep going. At some point, it's going to stop, okay? And that's the point where you want to start making adjustments. But until then, I think the best practice is just lock something in along the way. And if you want to try to let some more ride, then you lock in less at each reward risk ratio point. 1.5 to 1, 2 to 1, 2.5 to 1, 3 to 1, 3.5 to 1. Like those are the ratios where you should be considering exiting portions of your position. And that will allow you to lock in profits at a greater than risk than you're taking. And over time, that should produce a positive outcome, because when you lose, you're losing $100, but when you're right, you're averaging, $200. So you're averaging $150. If you're doing that over a large number of trades, obviously you will come out ahead, okay, instead of in the red like most people. All right, so thanks for asking. I hope that helps. All right, CRV. Okay, got it. Right. Sometimes, chat. I was referring to your description. Oh, with my, yeah, right. I know. There's like a 30-second delay on this chat. Okay, what's Vam-ang? I don't know what that is. Is that a symbol? Or is that like, is he saying hello or something in another language? I don't know what that is. There's no symbol there. Maybe it's, I'm sorry, I don't recognize that. So let me move on here. Elizabeth, hold on. So Elizabeth says here, she's a physics and math major and will pursue a PhD in physics. The quantitative analyst thing is a possibility. Yeah, well, she's certainly on the right track. Okay, definitely on the right track. Nothing wrong with, when you're getting into like the math and science part, and especially you mix that with some computer science, you can only find, I think, opportunities in those areas, especially with the way technology is going today. So, yeah, cool, no problem. All right, let's see what else we got here. All right. Can you take another look at China? Okay, 333. All right, let's see. What is that? Is it not taking it? Hold on. Let's see. Does it want to not give me the symbol? I'm looking for it. This is it right here. I see EGRNF. It's an OTC stock now. I guess that's the same thing. I'm guessing. I wouldn't go near this. The thing is sitting on its lows. Clearly, in a situation like this, where there was some kind of, whatever, financial problem situation, charts are not going to help you in this situation. Not really. Let this thing change its structure like Bitcoin. Let this thing start breaking resistances before anything else, because there's a lot of negativity in this thing, and there's no point in trying to bet on where the bottom is. It's not like you're dealing with a good company. If it's a stock like Walmart or a stock like, Amazon or something, and they get into like a lawsuit or something and the stock gets beat up, whatever, Qualcomm, they get beat up for a while, it's still a good company. This one, I don't know about, right? So that's why it's not worth playing that game. It's not. All right, so I wouldn't even go by the chart. Let this thing really prove itself by changing, let it break resistances, right? And then and then maybe, at that point, it would at least prove that some money's flowing into it. But other than that, I think it's not worthwhile. All right? Is that a spam? Maybe it is a spam. I don't know. I don't know what that is, but I'm gonna erase it, because this guy's spamming. What's wrong with this guy? Why would they spam me? I have like no followers. I have a small group of followers. Why did they go and spam like, these guys would have 5,000 live stream people show up? Go spam there, right? Don't spam my people. My people are too smart for you anyway. They're not going to go for it. So, all right, Sean. Hey, Sean. Thanks for stopping by. Let's see here. Anchor. Sure, let's take a look. ANKR. Let's take a look. Hold on. ANKR USD. What's the story here? So, Anchor looks like it's pulled back a bit, right? Okay. Now, coming off of support, first thing I want to see is I want to take a look at the weekly chart just to get a sense of, what are we doing on the bigger picture? So you have a buy signal on the weekly chart. All right, it's in an area, possible high or low. Okay, you're not buying into a resistance yet, right? That's your resistance up in there. Okay, so you have that going for you. Let's see what else you got here. So it looks like the recent price action is also following along Bitcoin, right? It's doing what Bitcoin's doing pretty much. Broke all of these resistances Okay, that's all good. So now if it's, and you have a higher low, look at this higher low pin bar right here. Okay, that's all good. So if this structure is going to now unfold in a bullish way, then you should be seeing higher lows and higher highs until you start getting into this area right here. Obviously, there's a lot of selling in this area. So this would be like good areas for price targets, for profit targets, and all that kind of stuff, right? You want to keep that in mind in that area. As far as taking a trade right now, just like Bitcoin, this is the worst place to take on a trade because you're still near these resistances, even though it's kind of, it's pretty strong. How much further is this thing going to go, right? So the thing to do now is wait for the higher low or the double bottom, okay? Now, I suspect that these things are going to be producing higher lows, but if they produce the double bottom, I think that's a lower probability. Then, that's what they produce, and that would give you another potential opportunity. If these things break, and Bitcoin would have to break too, if they break these supports, stay away from these things because they should not break those supports. So that's what you have to be careful of. Keep in mind, people are buying this now, okay? I'm sure all the hypesters are out on YouTube. Hey, buy Anchor. You're going to be a billionaire by next week, okay? All those are going. So all these people are going to get stuck in here, just like they got stuck up here, okay? They're going to get stuck. So you want to make sure that you're not stuck in that. So wait for the higher low, or like I talked about before, wait for the mini double bottom, right? If you get like a tight little, two little inside bar pattern, like right there, something like that, basically within the range of this bullish candle, right? Inside of this range right here. That's the range of the bullish candle, that large, today's candle. You get that little inside bar situation, that's going to be an aggressive long, just like I described in Bitcoin and a couple of those other coins, right? Those would be your options, I think. Those would be your choices to wait for. So you have your aggressive one, and then you have your conservative ones. It's just a matter of the market producing one of those scenarios. Otherwise, basically, this thing is going straight up, right? But, what is the likelihood of that? We know it's not very high. So I would wait for one of those, and then you have a possible situation. If you get into a trade, like I said, this area up in here is your profit target area, or use your reward risk ratio also to help you exit the trade. All right, so I hope that helps. Anchor. Alex, do you think that Evergrande, the stock market to pull back significantly, it's crazy high? Well, I don't think that, maybe, here's the thing with those high profile stocks that seem to cause some kind of financial problem in an entire country. Here's the thing with those. They basically point to them as like a reason, right? Oh, look, this stock China is going out of business because of this stock, right? So now the entire globe is going to feel the pain now because of this stock. They just point the finger. Don't go by that. It could be a possible catalyst, but I suspect that the catalyst that's going to take these things back, like the stock market, is going to be the dollar, the US dollar, because I'm waiting for that tightening cycle from the Fed. That's what's going to do it, okay? I think that's going to be a heavy factor. There are many factors that can come together to really cause more of a bearish, outlook. But I don't want to, let's just take a look at the stock market here real quick. Let's go to the S&P. You have to understand something. Look at this thing. It's back at its, basically, this is ridiculous, okay? This could be just like a handful of stocks. But the point is, look at where we are on the weekly chart, right? Look at where we are. So this thing pulling back, even if we get just like a normal pullback, that would not be a bear market. Okay, just keep that in mind. This thing can pull back a couple of thousand points, which is huge for the S&P. That's a lot of points, and that would still not be a bear market because look at this chart. This is going back. Look at this. Right, this is that's a weekly chart of the S&P. That's ridiculous, but that's stimulus. Okay, all of that is easy Fed, Powell printing money like a maniac. All kinds of whatever their stimulus bill, whatever's going on right now, the drama in Congress, whatever. I don't pay much attention to that. But that's what this is a result of. So I wouldn't blame one stock for taking this thing, changing this thing. It's going to be, are we getting more stimulus or not? And I think that answer is going to determine if we get a pullback or not. Okay, we have not seen a pullback, a real pullback since this, right? And that was March of 2020. We have not, and that was, as you can see, was very temporary. It was good for a few weeks, and then we have the magic rally, right? Wow, magic. So, yeah, don't pick on one company. I think it's a coincidence. And also, it gives the news organizations an opportunity. It gives them a story to talk about, and people love stories. So don't go by that, okay? So I hope that answers your question. Chris, okay, no problem. Kim, if you have time, Beyond Tech, okay? Let's take a look. Todd, I think it's a guy trying to spam the stream. Yeah, okay, I got rid of that guy. All right. Again, I don't know why they would spam my stream. There's plenty of fake gurus out there with huge followings. They would do much better spamming one of those big streams. All right, let's see here. Is this it? BNTX? I guess this is it. All right, and you're talking about Beyond Tech bottom. All right, let's take a look, Kim says. All right, now, all right, so I'm gonna, look, let's do a little interactive questioning here. So you have a potential double bottom here, right? And you have a potential pin bar to go long, right? You have those two factors in place. But what's the problem here? Can anyone tell me something that's not so favorable? Can anyone tell me about something about this chart here that kind of takes away from the bullish setup? What is something that we should be concerned with? I'll give you a few seconds to answer that because I know there's a delay here. All right. The symbol is 3-3. Yeah, so I put that in. Okay. I'm just going back here. The Russian are spam. Oh, so Wedge says the Russian posters are spam porn. Porn? Oh, okay. Yeah, I don't know. All right. Real people, not bots. Okay. Elizabeth, okay. Alex, I think you forgot what is. It's the biggest Chinese. Okay. All right. Problem is that a lot of other companies invested in it. Okay. No, look, whatever the story is, all right, whatever the story is, but if it was such a problem, then why is the Nasdaq blindly rallying? So that's why if the market's not paying attention to it, it comes around when it's convenient for the market, right? When it's convenient, oh, the market's selling off. Oh, it's that Chinese company again, right? Oh yeah, all these companies are losing money because they all invested in it. No, they don't seem to care right now. So that's why it's a problem if you believe in that stuff, because it'll give you a bias, right? You'll be like, oh, this market, I'm going to short everything. Right? Meanwhile, the Nasdaq is almost, the S&P is back to its highs, which would be very painful if you're short. So that's, and that would all stem from an irrelevant opinion. All right, so I'm just getting the answers here. I don't like that it took out the lows. Okay, so here's the problem that I have with this. Lower high, right? You have a lower high. And okay, look, so here in a situation like this is conflicted, because you have this nice move, okay? That's a nice initial move. You waited for a pullback, right? And now it's giving you the double bottom. But at the same time, right, it had to produce a lower high. So that's just something to keep in mind, because with the lower high in place, I mean, theoretically, it should make a lower low. So you have to be careful of that. But that's all I wanted to mention. Also, this lower high is going to be a reference point. So as far as bottom, right, I like the double bottom idea. You have a bullish pin bar there. Take out the high of the pin bar, 258.5, right? You have yourself a trade. The low is 250, so you round basically 250. So you're looking at $8 of risk, which isn't bad. All right, if you make it back into the middle of the range, 281, that's right around here, that's not bad, right? You're risking $8 to make like almost 20 or something like that, more than 20. So that's definitely more than 2 to 1, right? And that's just getting back up into the middle of the range and not really going anywhere. So yeah, I like the idea. What you just have to be careful of is the break of the low. So you have the bullish pin bar, and if this thing takes out the high tomorrow, okay, you're in good shape, but you need to see that thing. I'm not tomorrow, Monday. Tomorrow's closed. You need to see this start doing this, okay? This is what you need to see. This is what you need to see, okay? That's what you need to see. If instead you see this, all right, you see a candle develop here, that's not what you want to see, okay? You don't want to see a candle that does this, all right, that basically tries to take out the high and then gives it all back. Then that thing is probably going for the low, right? It's probably going for the lower low at that point. So that's what you have to watch out for. Again, we can't predict, right? We have to just basically measure our risk, know that our probability is likely to favor one outcome more than another, which in this case would be a bullish movement. But how far that bullish movement goes, there's no way to know. So you have to be prepared to adjust. That's really that's the trader mindset versus the analysis or analyst mindset. People don't realize that there's two separate mindsets, all right? Hope that answers your question. All right, let me see. Let's have a great idea for your personal brand. Yeah, sure. Well, I'm still working on some stuff. We'll definitely, once I have some more substantial things to show, then yeah, definitely. Thank you. I appreciate that. Alex, I don't trust the news much, and I don't trust USDT. Well, nothing wrong with that. I don't blame you. It's like weak, right? Exactly. The whole Tether situation is very, very. I talked about it a few months back because I saw some videos about what some of the stuff that they're basically not showing, and it's very questionable, right? So the thing is, these questionable things can persist for a long time before people realize, oh, there's no money backing Tether at all. There's nothing. If that comes out, like if there's some kind of proof and it comes out, man, Bitcoin will probably get cut in half in a matter of hours, okay, if that comes out to be. But, they've been dancing around the subject. Oh, it's backed by commercial paper. Oh, it's backed by this. Oh, it's backed by that. It's not, they're having a hard time proving what's backing that money behind Tether, right? It's supposed to be backed one-to-one with dollars, but I suspect it's not. And if that comes out to be at some point, that'll be something that comes out of nowhere. It's just one night you get up and why is Bitcoin minus 50%? Oh, Tether went out of business. Okay. So just when I talked about this a few weeks ago, all I was saying was keep in mind that that's a risk. That's a risk that's in the system that you have to be aware of. All right, because no one's paying any attention to that. And as long as they keep it quiet, right? Because everyone's keeping this quiet. Governments, everyone's keeping it quiet. It's good for everyone to keep it quiet, especially now because a lot of companies have stakes in Bitcoin, right? They all have exposure to Bitcoin. So it's in everyone's best interest to play along. But at some point it can you know how things go. So just something to keep in mind. That's why I keep emphasizing how speculative the space is. Nothing may ever come of it. But if something comes of it, it's going to be painful, okay? We can't predict that something will come of it. Even if they're faking it and they fake it, for as long as whatever, it doesn't matter, right? As long as they're faking it and they're keeping the system going, hey, whatever. They're keeping the system going. So that's the way I like to think about that. But whenever you're getting involved in these things, just keep it in the back of your mind, okay? So, okay, the trend is bearish, right? Okay, they're talking about this stock here. So this trend is not bearish, though. See, people are saying it's a bearish trend. You may be saying it's a bearish trend because of the lower high. This is not a bearish trend. It's a pullback of a broader bullish trend, if anything, okay? If you look back on this thing, right, perspective, the general trend on this stock here is bullish. And you had this initial move. What a move. And now it's pulled back and corrected part of that move. That's bullish. All of that is bullish. The only thing is you have the lower high, okay? Which is clearly established there. So that's the conflict. But whenever a double bottom develops, I mean, obviously you're going to have a lower high in place. The question is, does it make the lower low? But don't think this is bearish, right? That's where people go wrong. So thanks for mentioning. Alex, I don't like that it took out lows. Okay. Talking about this BioNTech. Farhat, CRO USD. Okay. SPX is on the all-time high. This is not. Okay. Well, that's a good observation, Todd, about relative strength of the S&P. But here's the thing. When it comes to these biotech companies, they tend to be less correlated to the S&P and do their own thing. So that's where an exception will come into play. But it's only pretty much for biotech, right? Because some news, whatever, is driving that thing, and that's why. So they have a tendency more to do their own thing, reacting on to some specific news. All right, so here's CRO USD. All right, no surprise here. Same situation as Bitcoin. Took out those little minor resistance area there, testing this area here. Possible structure change, right? Just like Bitcoin. It's the same story. Like I said before, if you're going to take these buy signals, just think of it as one big Bitcoin trade, because that's pretty much what you're facing. In this situation, you're waiting for basically three scenarios. You're waiting for the pullback, for the higher low, the possible double bottom, and reversal, right? Just kind of like that BioNTech. The BioNTech had the double bottom, but it had that lower high. Imagine this thing had the same thing, right? That would be a double bottom, or the little mini continuation pattern, which can appear up in this, basically inside the range of this bullish candle that we see right now. Okay, inside that range. That would be an aggressive long. So decide now which one you want to take if you're interested in one. And keep in mind, the aggressive long has a better chance of being stopped out. So you have to accept that now. And if you don't like the idea, don't take the aggressive long. All right, so that's that. How am I doing with time here? Okay, I got to wrap this up here, people. I've been talking too much. But all right, let me see. S&P. Okay, the Nasdaq is also blindly in 2008, right? Actually, no, I think it's much higher than 2008. How long can the bear market? Well, Peter, as far as the bear market, that's going to be a function of the Fed, because the Fed is trying to control inflation and this and that, which they haven't started to do that yet. But at some point, they're going to begin their tightening cycle. When we see the tightening cycle, then we'll probably see more of a corrective move in the market. But it's going to be hard to call that a bear market unless we really have some major selling off, right? Which is just hard to believe. And as long as we have this dovish Fed, we're not going to see a bear market. And as long as we have, a Fed that just likes to print money and stimulus bills and blah, 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 we're not going to see one, because they're just pumping the market with so much money. You can't have a bear market. Now, I know it's hard to believe. How can we not have a bear market? But as far as the length of a bear market, it's going to depend on the Fed. If we go into some kind of bear situation, some kind of recession, companies aren't making money, the Fed starts loosening rates again, right, back to zero, back to negative. They start putting money in our bank accounts just because we live in this country, right, because they want everyone to be optimistic and start buying stuff again, right, then you'll see us come out of it. So there's no way to know in advance how long a bear market will be. It's going to depend on how the Fed handles it, and who's running the Fed at the time. Are they hawkish or are they more dovish? I mean, the guy we have right now, I don't know what to say about this guy. He certainly seems politically motivated and irresponsible. Definitely, I could say those words, because I just don't understand the stuff that I do read that they come out with. I just don't understand it. So maybe it's me. What do I know? I mean, I've never run the Fed, so I don't know. But certainly seems like there's something wrong. Okay, let's see what else we got here. Okay, so I got to wrap this up. Should we think about it, bear market, bull? Should we think about it that way? Bear market, bull market? Well, Alex, that's a good question. All right, probably not. I mean, it's good to think in terms of structures, right? Lower highs, lower lows, higher highs, because those are the patterns of the market, right? Those are the patterns of order flow. And if there's an imbalance, like a bullish trend is what that is, then you're going to see higher highs, right? And higher lows. So you don't want to be opinionated, though. Let the structure tell you what the market wants to do. And then when the market changes, you change with it. That's why when people ask me, what's your opinion on this? I have no idea. I don't have any opinions, when it comes to stuff like that. I let the market tell me what it wants to do, and then I adjust to it the best that I can. Okay. Is the Tether fund coming true actually bearish for Bitcoin? One would assume that everyone tries to get out of USDT as soon as possible. Like they buy, okay. Yeah, you know what, Kai, as far as the Tether situation, I don't know. I mean, your guess is as good as mine as far as how the market would react if Tether comes out and says, not backed by anything, sorry. You know, if they say something like that and everyone has to dump their Tether, I don't know. You know, but what does that mean for all the coins that have been inflated on Tether, right? That means all that price inflation is nothing but false price inflation. People that transferred their money to Tether and then bought these garbage coins with Tether, or Bitcoin with Tether, right? Then that means those prices aren't really, those valuations aren't really there. They're not real because they're backed by nothing, right? It's hot air. So what's going to happen there? Again, I don't know. All right, cool. So should ask, okay, hold on. Just trying to get through these questions here. Should ask us more often, like if we say something wrong. Sure, Alex, well, I'll definitely try to, I definitely plan to have more interactive, like basically asking my viewers questions about charts, right? So it'll help you get the perspective better. Yeah, I'm certainly planning to do more of that. Okay, cool. All right, no problem, Alex. And if USDT fails, people will exit. So that is why I should lose. So, I mean, yeah, again, whatever. I don't know, you know, and I don't pretend to know. All I know is it's not a positive thing. if Tether, since so much stuff has been built on Tether, I can't imagine it having a positive outcome, you know. But again, that's applying logic. I could be completely wrong, so I don't know. But it certainly seems like a risk, okay? You know, when something's not backed by anything, but the whole world bought it and they put all that money into something, whether it's Ethereum, whether it's Atom, whether it's VeChain, whatever it is, then those prices aren't real. The value of those coins is not real, right? So I think they say $66 billion or $70 billion might be fake. If that's fake, then the market has to adjust, right? That means that money's not really in the market. Okay. All right, cool. No problem. All right, everyone. So I'm going to wrap this up. Thank you all for spending some time with me here today. I know it was a long one today. Enjoy the rest of your day. Tomorrow's a holiday. Don't get sucked up by this holiday optimism. A lot of times it's nonsense. It's just holiday optimism. Next week will likely be similar. So, you know, take some time off, relax, enjoy your holiday and all that other stuff, okay? So again, thank you all for the holiday wishes, the nice holiday wishes, and you know, and all that. So if you want to check out Greenbridge and you want to check out my ebook and all that stuff where I cover in detail the steps that I go through to do this analysis, you can check that out in the links in the descriptive portion of this video. Other than that, I want to thank you all. Wherever you are in the world, enjoy the rest of your day, the rest of your evening, and thank you very much for watching.